Paul, if the wisest oil sage out there, anybody I talked to, could have figured out that oil and gas and energy stocks would be this hot this year. What a turn.
Yeah, Brian, it's been quite a year so far. And like you were saying earlier, quite a 6 months. We've seen the widest outperformance, like you said, in, going back almost 20 years. And what's really interesting is it's a complete opposite of where we were just several months ago, where tech was outperforming energy by over a 6 month period by the widest margin in about 20 years. So it's really been this quite quick switching of flipping of the switch, so to speak.
Yeah, and you can't say it's money coming out of technology and into oil and gas. We don't know, but it certainly appears that there is an element of that, despite the fact that we hear all this about ESG investing and literally big funds, some of them endowments at universities, are not allowed to own oil and gas.
Right. So you make a good point. It's like a point we made up with the small caps, late last year, is that it doesn't take a whole lot of capital to get the sector moving or to get small caps. Small caps were like were smaller than Apple at one point last year. And energy is like less than a fifth of the size of the technology sector. So when you get that wide of a move, you don't need a full rotation out of technology and into energy to get this type of move. It doesn't take a lot at all. The energy sector was 3% of the S&P 500, and the technology sector was over 25%. So it doesn't take a whole lot to get a sector moving when it's that far out of favor.
Yeah, and by the way, as the Occidental CEO told us on a CNBC Evolve event, part of the interview is up on our website, by the way, if you've got demand growing, but the inability to drill more wells due to either banning on federal lands, which is about 14% of oil and gas drilling, you're going to have fewer people that have to meet greater demand, which, of course, we know what that means. It means that the prices and values of those assets goes up. Do you think this can continue, or do you think the trend is over, Paul?
No, I think you could see this trend continue. And I think what you were just talking about, you have this drying up of the supply of assets, which creates, higher prices for it. What we're seeing in the market right now, too, is growth stocks, and which is a lot of the technology sector, are coming under pressure right now. Because think about it. Last year at this time, there was no growth to be had, or there was very little. And what there was in the technology sector and in some of these high growth stocks. Now we're in a situation we're looking forward. We're going to see some of the strongest economic growth in decades, as economists are telling us. So there's growth all over the place. So suddenly that scarce asset, of growth in earnings is all over the place. And so the law of economics 101, more supply leads to lower prices. So when you have these high growth stocks now, which were very dear, some of the air is deflating out of them, whereas the value stocks, which we had a lot of, are becoming more in demand.
Shepard Smith here. Thanks for watching CNBC on YouTube.